Bitcoin technical analysis. Today on air with Tone and George. How's it going, guys?
Very good.
Going well, thanks.
Excellent. So we've got some price movement in Bitcoin, and we've got a lot of movement in other markets. Today there was some talk from the European Central Bank, and yesterday Janet Yellen did some talking, and everyone's waiting to see what's going to happen. So, yeah, George, what are you going to talk about today? I see you've got a Bitcoin chart up.
Yeah, I'm going to spend a fair amount of time on Bitcoin, particularly Bitcoin and China, especially with the news coming of the SDR acceptance of China. So I'm going to get into that, and then I'll talk about the US dollar and the euro and interest rates, but that's all I'm really going to focus on today because I think it'll take up a big chunk of time. So starting with Bitcoin, I have a 4-hour chart up, and I still think we're in a bullish place here. Resistance for me continues to be around 383 and also this 370 level. We haven't been able to really break the 370 level in a while, but I think we had a test of the 50-day and it's come back up. And I think that's going to be some support here. Looking at the RSI, it's still in a pretty bullish place. And again, I always look back at the weekly to see where we are, and it continues to be really bullish. And I think that as long as we stay in these levels, and the RSI here looks to be strong, it never really has come down below 50, well, even 57, 58 in this whole entire move up and then down. So that's really bullish to me, and just the position of the price itself. So now I'll move on to China and Bitcoin, and I wrote a blog post today about this, talking about how acceptance into the SDR is bullish for Bitcoin. And I'll just bring up the post because I have some charts in there I want to show you. So essentially what happened was that China now has been accepted as one of the currencies that make up the basket of the SDR. What's actually interesting about that is they're at 10% now, which is more than Japanese yen and the British pound. So with that, they've had to do some economic and structural reforms to get accepted, and they've been doing that, and there's more work to be done. And essentially, one of the first things they did was they depreciated the yuan versus the US dollar back in August, and the market actually, it was a 2% depreciation, but the market got really worried and scared and thought that something else was happening and the economy was going to fall apart, and that really hasn't happened. But however, what they're going to wind up doing, and there's different people expecting different things, but the reality is, overall, yuan is at least overvalued versus the US dollar due to the band that it trades in, and they're going to continue to let it float freely. Some people expect that when the US raises interest rates, that they'll just completely disengage the band and let it float freely. I'm not sure if they'll do that or not, but we do know that, according to most people, that it's at least 20% overvalued. So when I look at that, and here's a chart of the renminbi versus US dollar, and right there you can see in the middle of the chart over here, this is when they did the depreciation, and it spiked, and it's kind of floated down, then it's been trading back up to the 640 range, and the speculation is now that it'll keep moving higher, aka, in other words, devaluing it versus the US dollar. To me, this is really bullish for Bitcoin. And simply stating is its purchasing power lost in China. And with the capital controls in place and Chinese people losing purchasing power, they're obviously going to do what they've been doing, and we've noticed this already and talked about it. They've been using Bitcoin to get out of China. So I expect that to continue, and as it starts to float more free, I think that you'll see the price appreciate as a result of that. How much they let it float, that could be a big catalyst in how much goes into Bitcoin to get out of the country and avoid capital controls. And then here I just have a chart, and I actually have this chart right here. So, the other thing that's interesting about Bitcoin and China as well is that, there's been these moves, and watching monetary policy, when it's been things like interest rate cuts, it's been bullish for Bitcoin. The Shanghai Composite and Bitcoin trade, when one goes up, the other goes down, and this has been happening for quite a while. And you've seen like the yuan devalued. At first it was bearish, but then all these other capital controls and economic policies have been instituted. Then the sixth rate cut came in October, and we saw the price start to rise. Not that I'm saying that one directly correlates with the other, but since China's been leading this market, I think there's a lot to be said about the fact that Chinese policy affects Bitcoin price. And then I'm just going to put up this chart, which is a comparison of the Shanghai at the top with Bitcoin. And look, you could really see that when one goes up, the other goes down. And I'm even going to just zoom it in to a time frame which is just November. And you can see here clearly that there's a relationship to the Bitcoin price when China, this Bitcoin price is up here, starts to fall, the Shanghai goes up, vice versa. If Shanghai starts to fall, Bitcoin goes down, and you see this happening here over and over again. There's a relationship. So it's speculative money going in and out of Bitcoin, as well as people looking to trade where they can find value, and I think this relationship will continue to hold. So watching that is something else to be cognizant of. So now I'll move on to the U.S. dollar. Obviously, having a really bad day today. Had a fairly big day yesterday. Didn't get the candle we wanted, which would have been a reversal to the upside. But yes, like you were saying before, Theo, Yellen kind of has said that things are looking good, and December will be a launch-off point. So why is it selling off today then after it made that move yesterday? Well, simply it's because of the euro and Draghi. And Draghi essentially disappointed the market. Market wanted him not just to extend QE into 2017, which he's announced he would do, but what they also wanted was for him to raise the amount of QE per month. It's staying steady at 55 million. They wanted to raise a bazooka amounts of money. It didn't happen. So what's happened instead is Euro USD is spiking today out of this this downward diagonal. But I think that it's overshot. I have my resistance level at around 108.2. And I think by the end of the day we'll get back down there. This red line is my resistance. So I mean, really, what you're getting here is probably an oversold rally in euro, and I expect USD to continue up. The other thing that we have to think about too is when we're talking about USD. People say that when the U.S. starts to raise interest rates, it's bad for USD. You usually see USD start to come off. That's usually the peak of the cycle. There is a lot of history supporting that. I'll bring up charts next time, but it's spotty at best, and I'd have to say that in most other cycles, you don't have the rest of the world easing while the U.S. is making a point to strengthen their currency. So euro is continuing to ease, and Japan just also announced some major monetary policy today as well. China, as we just mentioned, is devaluing. So I think this time could potentially be different, but we'll watch the charts and price, and that's what we always do to see where we're going. So then the last thing I'll talk about is interest rates and how they're reacting. So yesterday the 10-year started to spike after she started speaking, Yellen that is, and it's making another up move here. It had a head fake down and back up above these moving averages. Again, they're compressed, so a big move was expected one way or the other, and we'll see if this actually holds water. Again, the 10-year and the 20-year, 30-year are a little less bullish than these charts, which I'll show you right now, which is the 1 year. Of course, the shorter end is already pricing in this interest rate move, so we're seeing obviously that it has a big move. 2-year, same exact thing for the most part. Not as overbought on the RSI, but in a bullish position. And then the 5-year is a little less bullish than them both, as you can see here, but bullish nonetheless. So what we're actually seeing is that the 1 and 2-year are telling us that yes, interest rate rise will occur, and the other charts are still saying how much is it going to be over time? What are they going to do? But it could change the interest rate structure of the whole entire bond market, but that is yet to be determined. And that's all I have for today. Thanks.
Okay, thanks a lot for that. Tone, you're going to cover the commodities markets and some other markets today?
Yep, absolutely. Let me, George, that was good actually. I agree with a lot of your economic views, especially China. I also believe the Chinese yuan is overvalued, contrary to the popular opinion. And if they were to float it, the value of the Chinese yuan would probably drop, considering so many economists in the U.S. are screaming that China needs to float so that their currency goes up. I don't think that would actually happen. So those were good charts. The one thing I'll probably talk to you offline about, but I don't really see the correlation between the Chinese yuan and the Bitcoin. So I wouldn't take it in that direction. But again, this is why people have different views on things. So this is my chart of Bitcoin. I guess I'll start off with Bitcoin there. Again, so what was, I will draw right on this chart as well. And I'm using our liquid index from Brave New Coin for this instead of a single exchange. Let me get a rectangle here and let me make it like yellow. So we had this big top recently, and from there we had a secondary high. And to me, this is similar to other situations where we also had big exponential rises in price and then a secondary high. And it also happened over here where we had a big rise and then we had a secondary high. So I'm not crazy bullish on Bitcoin just yet. I was expecting it to fall down a little bit more before going back up, which it did not. But we did go up and we did make this clear secondary high at around 385 mark just a few days ago. And now I want to me, this is now pretty strong resistance, this new secondary high. So if we can get above that high, I will start to be bullish on Bitcoin. But until that happens, I'm looking at it as a secondary high off of unreasonably high prices. Also, the RSI never had a chance to go back down. To me, I don't see it really fully reset. And if I flip to the weekly, again, you can see the RSI went into overbought territory, and George commented on it as well. But again, we have different views on how we each view the RSI. To me, the fact that the RSI never went down is actually a bearish sign because I'm expecting the RSI to come back down further. To me, the RSI staying up too high isn't really a good thing. The previous time when we went up on the RSI, we've usually come down to at least the 50 level. I like seeing RSI go up and down between 70 and 30, but at least come back down to the 50. So on the weekly RSI, I'm still expecting a move of the RSI down to the 50 before we go back up. So that's my views on Bitcoin. Fundamentally, however, I'm very bullish on Bitcoin because of all of the problems in the fiat world, and it will be the best conduit for transfer of capital out of bad regions, like George mentioned about China. I just don't see it being as used like that quite yet, just minimally, but eventually that will cause the Bitcoin price to skyrocket. All right, let's talk about traditional markets. So here's the S&P 500, and I wanted to show the full chart before I go ahead and zoom in. So here we have our very significant resistance that we're still not able to crack, and that's the 2100. So these are the futures, by the way. I'm still using the December futures, but next time I'll probably switch. So this is pretty clear. We're not at the top of the S&P 500. And one of the reasons I heard this stated somewhere, you don't get multiple chances to get out of an all-time high. Like you usually get one chance, kind of like the NASDAQ in 2000 or the bubble back in the 1920s, the Great Depression bubble of the equities, or what happened in Japan in 1989. You don't get multiple chances to get out. You don't get 3 chances over a 10-year span to get out when it's a real bubble. So I'm fully expecting once the interest rate debacle is settled, once the year ends and hedge funds reset their portfolios, I'm fully expecting prices to go up. I don't know from what level they'll go up. We can easily pull back down to 1050, but that's hard to say. But I am expecting higher prices. We definitely have not hit the top yet. You have these clear candles. If you're a short-term trader for reversals, there really was no reversal candle in this area, nothing solid. There really isn't any reversal candle in this area. Again, nothing solid. This is a bullish engulfing, which is a reversal pattern, but there's really no significant reversal pattern right there at the top. So let me zoom in on this here. Right, so you have no reversal pattern in those rectangular boxes I put up. So yeah, the price can pull back a little bit more. My guess is it shouldn't fall past 250 much, and then it sets us up to break out. This breakout of 2100 can be massive. I mean, we can go from 2100 in the S&P to 2500 in the blink of an eye. So I'm really looking out for that. Hopefully I can time it in order to go long S&P 500. All right, gold. So this is, I've been bearish on gold for what feels like forever. Haven't really been able to time my trades very well. We had support that was broken and never really back tested. I guess you can call that a back test, but it's kind of iffy. So here's today's candle. It has the remnants of a reversal candle, but it's not very strong. It's coupled with the fact that it's a nice round number of 1050. So I can definitely see a reversal here. Oops. So let me zoom in. I can definitely see a minor reversal here to finally go back and test the 1100 breakdown. But again, I don't think gold bottomed. I really don't. We'll see how the year end goes, but I'm still expecting lower prices. If it pulls back up to 1100 and then it forms a nice clean reversal candle, something a little cleaner of a reversal candle that we had in this area. These are really, really tough reversal candles. They're not very clean. This is a little bit cleaner, but again, not ideal. So if we pull back up to 1100 and we get, switch colors here, and we get one of these after a prolonged 50-point uptrend or so, I would be probably happy to go bearish then, because I am expecting gold to fall under 1,000 for everyone to panic. Oil, again, I have been very bearish on oil as well. I don't see much prospects in oil. Of course, it really depends on the wars in the Middle East that may spike the oil price temporarily, but that right there, the $40 mark, is a very critical support level. Again, oil charts have switched. I'm now using the February expiration instead of the December. We are holding this 40 level here, and we do have decent consolidation right here. That is decent consolidation in about a $2 to $3 range. So if we consolidate here till the end of the year, a breakdown under 40 is going to maybe pretty bad, and it will be like a quick $5 drop to 35. I do expect the $40 price of oil to break down, and again, panic to set in, and this would be fitting with the rise of the US dollar. Oh, one last thing I want to mention is real estate. Somebody commented in one of our older, in last week's video, what are our thoughts on real estate? And I'm pulling up Martin Armstrong's blog, who is one of the people I read religiously about the markets and understanding the economy. And he's had this chart of the real estate market for quite a while. He's been posting this for years, even before 2015. He had the high in real estate. This is generally focused on U.S. real estate, but it applies to real estate in general for U.S. and probably Europe. He saw the rebound of real estate into 2015, and he sees a massive collapse in real estate. So I strongly recommend going to Martin Armstrong and then putting in a search within his blog for his views and posts on real estate. So you can read the reasons why he's seeing real estate go down to really, really low prices. That's all I have.
Okay, thanks a lot. Yeah, that's a very dim outlook on the future of the real estate market. But yeah, thanks for that tip. I definitely will check out that site. I wanted to quickly bring up something we don't usually talk about, the hash rate, because it did go up by over 10%, and that is and that's the last time it went up that much was almost a year ago. I looked it up. It said there was a difficulty adjustment on November 5th, 2014 that was also over 10%. But in 2015 we also saw some negative adjustments, first time in a long time. Well, actually in December 2014 there was one that was the first in a very long time. And we saw several, you can see here on the chart, there's several months where it went down. Now we have one, 10%. Some people say that's a real bullish sign. I'm not totally sure, but the money that was put into making those chips to add that hash rate, they're going to have to mine some Bitcoin. They're going to have to sell them at a good price. So it's definitely a factor in this market, and that also I want to call attention to the fact that in Bitcoin we talk about the price, but every block there's 25 new Bitcoins made, so the supply is increasing. So for the price to maintain, it's different than something that where there's an infinite, finite amount of something. It's different since there's always 25 being made. Let's take a look at the Bitcoin chart. I've got the intraday 4-hour chart. And we definitely saw some movement. Here is OKCoin CNY in yuan, which we already talked about, and there is definitely a lot of indecision up here at the 2500 range, and big sell-off. It tested the 4-hour Kumo cloud, the Ichimoku Kumo cloud here, and bounced off of it quite nicely. And since then, there was a good up move, and right now I think there's a little bit of indecision. So let's see what happened. We could get a Takin cross here and it could continue up, or I'm kind of expecting another test of this Kumo cloud right here, and even as low as 2185 if it really sells off hard. Also, which Tone is attending, there is the Scaling Bitcoin conference in Hong Kong coming up, and I think that that's going to create a little bit of market uncertainty, even though it doesn't directly have to do with price necessarily. Everybody remembers in the summer when everyone was talking about Bitcoin XT and there was a big sell-off and all of the discussions. So I just think that this whole conference, with it going on, there's going to be some uncertainty in the market. Now, whether that means up or down, I don't know, but I wouldn't be surprised if there's some movement in either direction during that conference. And that's all I've got for today.
Yeah, no, that was that's a good point. That conference could definitely spook the market a little bit. It will be live streamed for those that can't go out there and attend. My flight for Hong Kong is like in about 3 hours. So.
Oh, great.
And Theo, there's something else that you said with the hash rate going up. I happen to think that it's bullish for Bitcoin. I like seeing the hash rate go up. It means people are investing in mining, and the more investment there is in mining, the more secure the Bitcoin network, which leads to more confidence in the future. So for something like Litecoin, I've been expecting the hash rate to drop because of the halving. There's very little reward. Why would miners want to waste their hash power on something like Litecoin? and the 25 Bitcoin reward is also about to get cut in half. I think within the next 6 to 12 months. I have to double check the date.
It's around the corner. I mean, it's really around the corner, and to see a really big jump like that after a lot of months, it was basically no increase, like 0.1%, 1%, 1% down. That was pretty much the story, kind of like how the price was actually in Bitcoin. The hash rate was very similar. Here, we're just a quick look.
Yeah, well, the
10%,
one
5%, 0.1 down. So it was very similar to the price.
Yeah, the one rumor that I heard was it was Bitfury flipping the switch on their operation in Georgia. That remember, like 3-4 months ago, there were articles about that.
Yeah, yeah,
So
definitely. It could
that
be.
might be it. I don't know.
It definitely could be. All right. Well, thanks a lot, and we'll definitely check out the live stream, everyone. I'll try to put a link to that in the description. Please subscribe to this channel, World Crypto Network. Give us a thumbs up. Also, don't forget to comment. We always try to get back to your comments. Also, check out this video on bitcoin.com and check out the other links in the description. Thanks a lot, and talk to you next time.
Bye-bye.
Bye.